The housing market is on the verge of collapsing. Wait until next year, the prices are going to be way lower. Better sell and cash out now. From the headlines to the water cooler, this is some of what we're hearing. Is it true? Stick around, we're going to get into that today. Hey everybody, welcome back to the channel. It's your realtor Nick Isgro with eXp Realty here in Central Maine. As you know, on this channel we cover all things real estate here in the state of Maine, particularly in the Central Maine area. If that is of interest to you, you find any value in this content, I'm going to ask you to go ahead and do me a favor. Please go ahead and like this video, hit the subscribe button, knock that little alarm bell, and you will be notified every time we put out new content. Now, we're hearing a lot of headlines and water cooler talk about a major housing crash that's coming up. Is it a bubble about to burst? From the news to the chit chat, we're hearing a lot of this talk. People saying that there's either going to be a major crash coming up or there's going to be a major downturn in the home prices, but I'm not sure that's really true, and I'm going to go through this video today and explain to you why. Now, there are some caveats to this, so you want to stick around to the end of the video to hear those, because obviously everything in the housing market is going to be related to all of the economic factors happening outside of the housing market, so stick around for that. Now, let's jump right into this. As we get into this, I want to say at the front end, a lot of these things that we're seeing is based off month-over-month data. So when you're reading these economic magazines or looking at some of the headlines, a lot of what they're doing is comparing this month that they're reporting in to the last month of the calendar year. And that's a huge mistake. Why? Well, because as you know, real estate is an absolutely cyclical business, and we do have cycles. The important thing to look at is where are we now compared to last year? As we go through this, I think what you're going to see is that rather than some massive economic downturn and crash in the housing market, what we're more likely to see come spring is a little bit less of the intensity in the appreciation on the home prices and a little bit more of a normalized appreciation, 3 to 5% increase on the market. It's also important to note that back in 2020, it was a completely abnormal year. It was a total anomaly. But this year too, 2021, has been an incredible year as well. The prices have remained strong. They've been appreciating at a much higher clip than 3 to 5%. Inventory has remained low and the buyers are remaining hot. So what's going on? Let's start delving into this and see where we really are in the market today compared to last year, and then we can start forming some prediction of where we're going to be in the spring. So here we are, we're in the middle of November in 2021. We're in the late stage fall market, headed into the winter months. What does the current inventory look like? As of the end of October, we had about 1.9 months of inventory on the market. So that's an incredibly small amount of inventory. To give an example, as I've said in some previous videos, a normalized market would have about 6 months of inventory, meaning if we sold everything that we have today, we put on no new houses, how long would it take us to get rid of the inventory that we have in the market? A normal market would be about 6 months supply, 7 months supply. Right now we're at 1.88 months of supply here in the Central Maine market. Now, a year ago, in the same time period, we had over 2 months of supply. It was actually 2.25, 2.25 months of supply on the market. So looking strictly at inventory, and if we're talking about some major crash, well, to do that, we would have to see a big flood of new inventory to the point where you had, 12 to 18 months of inventory on the market, and that is what it would take to really start suppressing these home prices. But look at it this year, we actually have a tighter market into this late fall market than we did a year ago. So certainly the pressure is not going to come from inventory to loosen this up anytime soon, especially when you think that we're heading into the winter months when typically inventory actually gets a little bit tighter before loosening up headed into the spring. Now, we are seeing a little bit more market time. Last month we saw an average of about 23 days on market for listings. Some are, depending on where you are, what towns, whether you're in town, out of town, whether you're closer or not closer to amenities, it may take a little bit longer. I'm seeing a lot of homes that are sitting on there for about 30 to 40 days, which is not really crazy, but in fact, the average was 23 days. If we look at a year ago, the average market time in the same time period was 34 days. So last year, we actually had a longer market period for a lot of these homes than we're seeing now, which means that buyers are still frankly gobbling up the inventory. It's just taking a little bit longer. Now, as these homes sit a little bit longer than they did maybe than June, July, August, it does prompt people to say, whoa, there's a big market slowdown. But looking at it year over year rather than month over month, you see this is an absolutely seasonal trend, and the market is actually hotter on the buy side than it was a year ago. Now, the last piece of data that I want to drill into before we get into some other issues is the sale to price ratio. If you follow any of my videos and you look at the monthly market updates, you know the sale to price ratio is how much money did the home sell for compared to list price. So if you list it at $100,000 and it sells at $100,000, the sale to price ratio is 100%. Last month, the sale to price ratio was 98%. A year ago, 97%. So even though, again, we're in this seasonal downturn, we're not necessarily seeing all those insane multiple offer scenarios because buyers are actually having time to deliberate because things are sitting on the market a little bit longer, and we're not seeing what we saw in maybe June or July where things were selling up over the list price. We are in fact seeing stronger pricing structure than a year ago at the same time. Now, just going over these three statistics, I think these show why it's important to look year over year rather than month over month and ignore some of these headlines that are talking about the downturn, because yes, there's a seasonal downturn, but frankly, the market is stronger than it was a year ago when it was frankly an anomaly year. Here we are year two, still going at it. Now, there are a lot of folks that I'm talking to, and I was actually just at the grocery store yesterday, had this conversation with a nice gentleman about the idea of waiting until next year because the prices are going to come way down. Well, I think that might be a mistake. In fact, what I am predicting here, outside of some major catastrophic event outside of the real estate market, is that we are going to have an incredibly strong spring market where prices are going to move back up and there will be an appreciation. It might not go like this last spring where things just went crazy. I think it might be a little bit more moderate, but I think the sales are going to be strong. I think the buyer market's going to be strong, and I think sellers are still going to have the advantage when it comes to pricing their home. Here's why. For one thing, we still have an incredible backlog of buyers on the market. Right now, none of the buyers I've been working with are totally out of the game. Some of them that may have stepped off the gas a little bit, they got their kids in school, maybe they even rented a place because they got a little frustrated, they're still engaged. As I watch their behavior, as I have the discussions, they're still using the slow time of the market in order to get themselves out there and still wait for that right house. And while this time of year sellers start to hold back and the inventory remains tight, the reality is if you want to buy a home, you're not going to not buy it when the house comes up. So a lot of buyers are still out there, they're still engaged, they're still active, they're just waiting for that right home to pop up on the market. I can also tell you that a year ago on the sell side, I really wasn't talking to anybody at this time right now. Maybe a little bit of tire kicking, things like that, but nothing serious. Right now, as we sit here in the middle of November, I already have multiple listings ready to go for the spring. Sellers are already starting to come to me and talk to me and prepare for their homes to be sold in the spring. And that's why if it's happening to me, it's happening to other agents, other brokers around this area, which is a good indicator that we're going to have a robust market here in the spring. Now, it's impossible to talk about the housing market without talking about inflation, because as we know, one of the driving forces behind a lot of the tight inventory over the last year is the competitive nature of institutional investors in buying rental properties in order to hedge their investments due to inflation. Well, as we know, the prices are going up, inflation is here. I don't really see a lot of backing off in this area. In fact, rents are probably expected to go up over the next year, which A, means that you're going to have more people deciding they want to get back on a fixed income. They don't want these crazy things in their budgets. So they're going to be moving more into the buyer category as we bring new buyers to the market, but also institutional investors hedging against inflation see this as a continued good investment. They're going to continue to buy these properties as far as the rental properties go, which keeps inventory competitive and tight. Now, generationally speaking, as you know, last week we put out a video that talked about the influence of the millennials in the buyer's market. Millennials are coming to prime buying age, prime earning years, and they are going to be a continued driving force as they are moving more and more into the home ownership field. To recap last week, we know that millennials have paid down a lot of debts, they have increased their wealth, they're moving into the prime earning years, they're starting their families and looking for more space, and a lot of them now working from home. This is going to continue to put a lot of pressure on the buy side of the market, as we have a lot of boomers who are currently living in their homes, not flipping them into the market for sale, which is putting pressure on the inventory side. So all things considered, unless there is some kind of major change on the supply side, I don't see the demand going away. The supply is going to remain fairly tight. Prices should remain strong, and I think we're going to have a great market going into the spring. I think it's going to be another fun year in 2022. Now, the last thing I want to note is that one of the things that we've seen that's been particular to Maine over this pandemic is a massive influx of people moving to Maine. Over the last year and a half, Maine has seen a steady influx of people moving out of the cities, out of the more congested areas, particularly as they're able to work from home and they're looking for a more laid-back place. They're looking for that lifestyle that only Maine has to offer. Who can blame them? But Maine is now seeing competition of people coming here from out of state, as well as all of the domestic buyers. All right, now here's the list of caveats for all of this. For one thing, interest rates have to remain low if we want to stay in this environment. I don't see any indicators that they're not. The Fed has been playing footsie a little bit with changing the rates, but here we are the end of the year and we would expect to see things up over 4%. We're just not seeing these super high interest rates of any major movement. Little bumps here and there, up, back, but headed into December, this is a great place to be if you're still looking to buy a home, or frankly, if you're looking to sell a home and you want this strong market to continue. But it should be noted that going into the next year, should there be a massive change in interest rates, that could be a factor that will change the situation from what we're predicting today. So there it is, folks. I don't think we're going to see any kind of major housing crash barring some unforeseen event. I think we're going to see maybe some more moderate adjustments to prices going in the future, but I think we're still going to have appreciation going into the spring. I think we're going to end the year with buyers continuing to look for homes, inventory staying tight, and we're looking forward to a great 2022. As always, if you are in the market right now, if you've sold this year, or if you have your own predictions, I would love to engage in this topic. Please go ahead and drop a comment below and let's get that conversation started. And as always, thank you so much for sticking around to watch this video. My name is, again, Nick Isgro with eXp Realty here in Central Maine, and I will see you next time.